As far as the PVC pipe sector is concerned, I think there's a lot of challenge and headwinds on the PVC prices. So I think most of the PVC pipe companies have not shown very strong numbers. As far as BEML is concerned, I think the near-term trigger would be the strategic divestment which the company has been talking about. They've already divested the real estate business, which is now listed separately. I think if the investor has got a 12 to 15 month time frame, I think hopefully one could expect the strategic divestment news to play out, and that could definitely trigger a good upside. On the business side, they've got a large exposure on the railway side, which I think is also going to help them. So I think net, I think the investor should hold on. I think he should not be in a hurry to book out, as of now. I think, Shrishti, the company has posted a very strong set of numbers for quarter four. In fact, they have an order book of almost 3,000 crores, roughly about 6,000 odd wagons. And it's one of the, wagon manufacturers apart from Titagar, which has got a large mega order from the railways. My sense is that, they also, manufacture, bodybuilding bodies to the commercial vehicle sector. So, even from the CV sector, the business is growing quite well. The stock has appreciated quite significantly. So I would suggest that, if one has to buy the stock, I think one should wait for a sizable correction to enter the stock. Although long-term prospects appear to be quite strong, but I think in the very near term, the valuations have become slightly pricey. So at best, I think one can buy on a decline, not at the current price level.
Okay.
Yeah, I think possibly, the markets are still waiting for the mega merger to get complete. But I think over the next, say, 3 to 4 months, my sense is that the consolidation process will be complete. And I think the best part for HDFC Bank post the merger is that there could be a lot of synergy of acquiring HDFC customers for the banking business. And I think if you see the standalone performance of HDFC Bank, I think they have been consistently compounding about 20% growth, a very good ROE, a very good ROA, plus very minimal asset quality. So I think you need to have a little more patience when you invest in HDFC Bank now, because probably from the month of August or September, we could see consolidated numbers coming out, and that could possibly change the profile of the stock and give it a significant amount of re-rating. So I would believe that, if the investor has at least a 12 to 18 month time frame, he should accumulate the stock at the current level. I think longer term, definitely a lot of value can be made here. Mayur Uniquoters is a well-known auto component player. Basically, has a very strong presence, in the seating system segments of the automotive passenger car sector. And recently, the company management has sounded quite positive, for the current year, saying that not only the raw material cost price, input price, are easing, but even volume growth is expected to be pretty strong. So I think despite the fact, that the investor has purchased the stock at a slightly higher level, I think a 6 to 8 months time frame would be a little shorter. If he can probably hold on for the next, say, 12 to 18 months, I think he could definitely expect a decent risk reward here. So would prefer to, tell him to hold on for a longer period of time, and then definitely expect not only his cost price, but a decent profit from his, buying levels. I think Suprajit industries should be, engineering should be held on, Shrishti, because I think it's a very large player in the automotive cables market, especially catering to the two-wheelers and the tractor segment. In fact, they have a subsidiary called Phoenix Lamps, which is also doing pretty well. So I think, the investor is making a decent amount of money, but looking at the kind of uptrend we have seen in the volume growth for most of the two-wheeler majors, hopefully this year we have a good monsoon, then I think you could see further acceleration in the two-wheeler market. So I think continue to hold. Better prospects could come in for the year FY24. I think some partial profit booking is definitely essential. I think he's bought the share at a very attractive level. And I think despite the fact that, ITC would continue to do well, especially across all their product segments, I would suggest that, he should at least take out his capital so that the remaining shares become completely free for him. Prospects continue to be solid, but I think some amount of profit booking is definitely desirable. Yeah, I think, my sense is that Nexus Select is not a manufacturing company. It's a REIT, which is basically play on the real estate kind of assets which they hold. Normally in these kind of companies, I think one should look at the, the yield factor rather than looking at the earnings growth factor. This kind of stock is not a growth stock, but it can only give you some sort of steady cash flows over the next, say, 3 to 4 years. So I think in case the investor is looking for some sort of huge capital appreciation, then I think this stock may not provide him that kind of opportunity. It's only meant for those investors who want a steady cash flow. And that is definitely something which Nexus can provide significantly, because their leverage on the balance sheet is significantly low. The management has also hinted that due to that, they could possibly buy in more retail assets and ensure that their cash flows increase. And typically, such kind of companies distribute almost 90% of their profits to shareholders. So that is going to be the icing on the cake. So looking at that, I think this can be held on, but don't look at it as a pure equity investment. I think Sunteck is a very well-established real estate player, operating in the Mumbai market. In fact, they have now also commissioned affordable housing kind of project. My sense is, if the investor can hold on for the next, say, 12 to 15 months, definitely the real estate market has picked up, and that should benefit Sunteck also. There's a decent amount of pipeline inventory and a kind of decent projects which the company is doing. If the investor wants to average, he can even look at averaging at the current odd levels. My sense is that FY24 should be significantly better compared to FY23. So definitely a lot of earnings growth and a lot of new projects could add into the revenue for the company. So I would believe that if he wants to average, he can average at the current levels. Definitely a good investment story, but yes, give a time frame of at least 12 to 15 months from now. Cheryl, I would also like to second what Kunal has said, that I would not like to buy a falling life, because considering the fact that numbers for Q4 and the commentary given by the management has been extremely, cautious as well as negative. Most importantly, ever since the management mentioned the stake sale, the market is little uneasy and not knowing what exactly is the strategy of the company. So despite the fact that stock has corrected from almost 2000 odd levels to below 1000 odd levels, I think it makes a lot of sense to wait for at least another quarter or two and look at the scenario on a very real time basis, rather than preempting now as of now. So I would believe it's not the right time to buy the stock as of now. It's better to wait for the water to settle down, and then probably after maybe the June or the September quarter, one could take a fresh review and then review the call. Foseco is a MNC company, and which is a leading foundry in India. In fact, most of the foundries, Cheryl, are doing pretty well, considering that there's a lot of demand from the automotive and the auto component sector. Since the investor has held on from the public issue time, I'm quite sure that he's made a huge amount of profit and capital gains on his original investment. So I would believe that in case he doesn't require funds, I think keep on holding the share. Better numbers are expected in FY24 also, considering the kind of uptick we are seeing in the automotive and the auto component market. So better prospects ahead. So continue to hold.
Avinash, one more counter that is showing good up move is Elecon Engineering, and Ajay Kumar wants to know how much more upside is left for Elecon Engineering and any targets to keep in mind. Avinash, this question is for you.
I think Elecon Engineering has significantly appreciated Srishti, and I think if the investor has made a decent amount of money after holding it, I think he should book out. But if he's looking for fresh investment, my sense is I think he should wait for a sizable correction. The stock is now near to its all-time high, and I think although order book is great, the performance in FY24 is also expected to be good. I would believe that a better risk reward can possibly be possible if the stock corrects, significantly, and then that could be a good entry point. So I think at best, wait for a decent correction to buy in, but definitely long-term prospects appear to be good. I think looking at the kind of performance from the FMCG market, Shristi, I think EPL definitely would gain significantly. They have a large market share for their product vertical, and I think they also have a very large exposure to the Europe and the European markets. I think after a very long time, we have seen an uptrend in the stock, possibly because markets are expecting that the FMCG market in the domestic markets, especially in the current year, should do exceedingly well. So I think you should hold on. It's a MNC company. Blackstone holds a majority stake here. So I would not be surprised that possibly from the second half of FY23-24, one could expect a decent amount of re-rating here. So continue to hold.